Good morning, all. Paul Asmar coming to you this Friday morning, February 28th. And the reason I'm saying it's me coming to you because what I'm about to say certainly doesn't represent the pitfuturestrading.com. This is me saying it. It has nothing to do with Window Trader, who I mention on here, or whatnot. But again, right before I start, this is basically going to be what I think is happening, why it's happening, more than what I expect today. So if you want to shut me off right now, be my guest. But I think it's pretty important for, I think, people to know, especially people who trade and have money invested and have no idea, how the market used to work and how it works now and whatnot. So let's start with a couple of things. We hit an all-time high last week. I traded as low as 288.10 this morning, right? Right above that very critical 287 level I talk about. But that is $51 in 6 days and a pre-market. Now, let's get something straight. I worked on the stock exchange for 25 years as a specialist, and I'll explain what that was as opposed to what goes on now in a minute. I'm very happy where I am. This isn't a bitter story. I love what I do from home. I loved what I did on the floor of the stock exchange. It was the greatest place in the world to work with the greatest people. However, the last 2 years that I was there became torturous because of the machines that started coming into play. And I imagine what the people who are down there now go through. So I have nothing but respect for those people and for the exchange. But let's talk about what's going on. Machines rule this market, right? But there's two different types, as far as I'm concerned, of algorithmic trading, high frequency, and whatnot. This market for basically 11 years has basically gone straight up. That's another point. So many guys that trade now or on these trading desks never saw a bear market. They all started after 2009. Forget about a bear market. They never saw the market really sell off. Okay? So that's number one. Number two, these algorithms remember we were talking about the train going 20 miles an hour and then going 300 miles an hour? Well, we can't have it both ways. We can't be happy when our 401ks are going up, when the stock market's going up. Oh, look at this. It's going up, it's going up, it's going up. And now all of a sudden, man, this is absurd how these machines are taking this market down 50 points in 5 days. Nah, it doesn't work that way, kiddies. They wanted machines. They got them. Okay, that's number one. Number two, I told you there's tremendous profits in this market. Do you really think hedge funds, pension managers, all the big money guys were pouring money into this market as it went up? Of course not. You see the volume we do on the way up. It's nothing. All this is algorithmic traders beating the crap out of each other for pennies and high frequency guys doing it. If you think those guys provide any liquidity at all, you should never make a trade again. And this is living proof of it. Now, hedge funds, pension funds, big money guys, yes, they're using algorithms because there's no way to go on the floor anymore and say, here's $1 million to sell, work this for me and this and that. They just feed it into a machine. However, as opposed to these guys just trying to penny each other and make a penny here, a half a penny here, a dime here. These guys have tremendous profits in the market, the big boys. Yeah, they're using algorithms and they're using them fast. Boom. Huge difference between the algorithms taking it up and the algorithms taking it down. Huge difference. I was a specialist. We were called specialists because we specialized in stocks where we made markets in them. 90% of the volume that traded in the stock that we made a market in traded through us and the New York Stock Exchange. I had a responsibility to my customers that I traded their orders, to my companies that I represented, to the stock exchange, and to my firm. That's a lot of hats to wear, but we loved it and we did it. Price is always going to seek its level. You heard me say that a million times. I'm not saying if there was real specialist market makers that this wouldn't happen. But I can assure you, it would be a lot more orderly and less painful than what we've seen in the last 5 days. Our job was to provide liquidity and dampen volatility. We did a pretty good job of it. I can assure you, if this market really went down to where it was in the past, where we were making markets, we would be out millions and millions of dollars with huge positions and have provided liquidity, dampened some volatility, and did our job. I can assure you, me sitting here, any retail trader, does more trading and takes more positions than people that are on the floor now. But that's not their fault. It's not their fault. They're all owned by high-frequency trading firms who put in an algorithm here, an algorithm. Okay, I'll buy 2 shares here, 3 shares here, 4 shares here. We'd be long millions of shares in all our stocks. We had no choice. We had guidelines. We had companies to answer to. There's none of that anymore. I don't know why you would even list on an exchange. Why would you pay a listing fee to any exchange? Just have your company listed somewhere where your shares are traded. You're out of your mind to pay a listing fee. We cannot blame machines for doing this. They wanted it and they got it. So, where are we today? Well, we're basically, like I said, pre-market 288.10. I don't doubt we get to that critical 287 level. It's going to be pretty important for them to hold it, because if you look on a weekly chart, every time we traded at that 287 level, right? If we didn't hold it, down. You didn't hold it, down. You didn't hold it, less of a down move, until we finally got up above it and went. And now look where we are. This is a 1 week chart. We've done 860 million shares. When we used to have this kind of volatility, we used to, hey, if there's a million for sale in a stock, well, so-and-so was a buyer 2 days ago. Well, maybe he has an interest now. If he bought it up here, maybe he'll want to buy it here. Right? You'd slow down the trading. You'd get that buyer in there. Hey, do you have an interest? Hey, yeah, you know what? I do have an interest. I do want to buy some more here. And guess what? Okay, I'm going to buy some more too. And we put a trade on and we go from there. There's none of that now. These big guys don't care about any reference point. I told you that days ago. We did 288 million shares yesterday. We're going to do over 1 billion shares. But we can't have it both ways. We can't say, hey, everything's great when the algorithms are slowly taking it up. They're not taking positions here. They're just fist fighting with each other, making money. And then all of a sudden this happens, and there's not one of these people that bought here are buying here. Not one. So don't forget that. All right. What are we looking at this morning? Well, we're looking at another gap, right? Last trading month of February. This will make 5 down gaps, 5 up gaps. But boy, the down gaps have been a lot bigger. Right now we're trading at 293.53. My pre-market high right now is 295. We're right at it, around 295.50 or 60. Oh, no, it's not. I apologize. Yeah, 295.40. So that would be my first destination on the upside. We're trading at 293.18. So 295.40 would be my first destination on the upside. Then it would be yesterday's low of 297.51, which would fill the gap. And then above that, the price probe. Remember? I said downside price probes haven't been accepted forever. Well, this one's certainly being accepted. 300.65 would be our next destination. And then above that, we really have nothing. Remember, I said there was nothing to yesterday's high. So it's incredible. The vacuum and voids we had on downside are now starting to get to the upside. So what downside reference points should we give you? Well, we're taking out 1, 2, 3, We're taking out 3 daily lows, a weekly low, and a huge, no, not a huge gap, but a gap of 136 points from October 11th. Right? That gets filled at 294.21. So I'm going to start with that. We have a weekly low of 295.57, and then filling the gap at 294.21. 136 point gap from October 11th. Below that, we have 292.96, 10 wide from 10.10. 292.04 afternoon pullback low from 10.10. 291 daily low. 290.06 daily low. 288.49 weekly low. Excuse me. 284.82 monthly low. And we'll stop there. And then let's look quickly on the charts. Here's your monthly. Remember we said if we get accepted into October's month, your destination would be that monthly low of 284.82. Well, certainly looks like at some point we're going to get there, right? Huge balance on the monthly, and we're going to have an outside month down, a tremendous outside month down. I don't think I've seen us close after taking out a previous month's high. Last month's low is 320.36. Right now we're $27 below it. Weekly. Again, this weekly chart's not right. Well, some of it is, but here we go. You think we just took out? Look at this. Look how many weeks we've taken out in 1 week. October, 5 months just about. 5 months wiped out in 6 trading days. And then there's your daily. Now again, I'm not saying this would look, I'm not saying it wouldn't happen if there were specialists, if there's a central place to make markets. But it would not have happened at this pace. I firmly believe that. There's just, nobody cares. Nobody cares. Right? Machines don't care. And these guys want out. You want me to give you a game plan? Wait for A period to form, right? I don't want to be a buyer here. Don't want to be a seller here. I'll wait. I would love to see them just force it down to that 288 level, see what we get there. I think it's important to hold it. If not, then you're going to see some more downside in the coming weeks and months. If it holds it, maybe we stabilize. Maybe that would be the bottom of our monthly balance. It would be a huge balance, right? It's still going to be a huge balance, right? We're trading at 293. Even if this is the low of the day, you're talking about a $46 balance on the monthly. A lot of damage done. Wait for market generated information to form. Good luck trading today. And we'll recap the day, the week, and the month at 4 p.m.